The gang is all here. The crypto rally is back on despite Kevin's best efforts. Discussing that, the latest with Powell, commercial real estate eating shit continuously, and much more today on Money Never Sleeps. Welcome back, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel yet if you have not. Nothing that Kev House or I say is financial advice, so please do your own research before making any buys or sells. Kevin, good morning. How are we doing?
Doing good, man. I just checked New York Community Bank's chart right now. Absolute insanity. Gotta love Mnuchin and his $1 billion fund that came to the rescue, but let's be honest, is $1 billion a lot when we're looking at this entire bull market? Probably not.
You are correct. Probably not. Leroy, thank you. That intro gets me fired up as well. Mr. House, good to see you. It's been a while since the three of us were all on stream together. We're having an interesting text conversation earlier. I was like, you know what, let's put this on stream because I think it was, we get so caught up in the day-to-day movements in crypto and everything else going on. I think it's good to step back and have some of those bigger picture conversations. So we can touch on that in a bit. But how are you doing today? How are you feeling about the current state of the market? Crypto is bouncing back after yesterday. ETH is rallying, kind of leading the charge right now. But what are your thoughts overall in the market?
Yeah, I think for the most part, for a while, I was in the same boat as Kevin, and I still haven't completely left the train of thought that there could be a massive correction. But I had some ETH, I had some Bitcoin, I had some stables lying around that I hadn't allocated in my short-term portfolio. So once Bitcoin started breaking like 52K and essentially just hammered its way up to 60K in like two to 3 days, at that point, I just started more actively trading the trends. But for the most part, I feel pretty comfortable with a lot of my holdings. Most of what I buy isn't to flip short term. I'll just take a perps position for that. So most of what I allocate my portfolio to is with anywhere from a 3 to 10 year timeline in mind. So I've been gathering a few of the L2s and a few of the more, I don't want to say like altcoins, even though they technically are, but more the kind of infrastructure tokens that correlate to like IoT, GPU, CPU, AI. So things like, internet computer, Atom, which is Cosmos, Polkadot, Render, and stuff like that. Just trying to get a little bit broader exposure to the crypto market and, just hope one brings me to the moon.
Listen, you need that one. You need that one unicorn to carry you to glory. Kev, let's get into a little bit with banking to start. We'll talk about what Powell had to say today on the Hill, but give us the latest on what's going on there with banks. I did see the bailout, the $1 billion being raised like right before we came on. Kind of get everyone up to speed there.
Yeah, so New York Community Bank, we knew that they had a lot of problems because they were taking on the debt of Silicon Valley. Again, bad debt to bad debt. It seems like it's a bad case of chlamydia just going around. Anyone who has exposure to it's going to be affected. But unfortunately, no antibiotics or any type
it took
of
less than 4 minutes to get the first reference of a sexually transmitted disease on today's show. I think that's a new record.
I was also kind about which disease I chose. But one of the curable ones. But I don't think this is curable in any way. I think that there is one way that this does play out, and then has to be some of these banks have to collapse. Again, I've talked about this ad nauseum. We are in a globally synchronized economy. Also means that when we get recessions, they are globally synchronized as well. So with what's happening with New York Community Bank, it's no different than what happened with, I think, Zhongyi back in, I think, 2 months ago in China. And it's also no different than what we're seeing now. Just bad debt going all the way around from one bank to the next. And, the worst thing about it right now, and I saw it earlier today, that they're going to try and change the requirements for Basel III. where, a lot of these deposits and the requirements to keep a certain amount of capital on hand of these banks is going to change. Why? Because a lot of these banks are getting too big and it's becoming too hard. It's the problem with New York Community Bank. I think they're also doing that in hopes that JP Morgan or Bank of America might be able to take care of some of these banks if something bad were to happen. We'll see what happens there, but it is just absolute fallout. I don't think this $1 billion that Steve Mnuchin's firm, what's their name? Liberty Strategic Capital, Hudson Bay Capital, and Reverence Capital Partners, those three coming together for $1 billion in exchange for equity. I don't think that's equity I necessarily would want. Again, I think this is probably very similar to when I think it was JP Morgan loaning money to Bear Stearns back in March of 2008. They got the loan, and next thing you know, stock still dropped 40% afterwards. So I think this is something we're going to have to watch. Bank Term Funding Program ends Monday. Stock buybacks end next Wednesday, I believe. It's a matter of time before a lot of these banks are just hit with that wall of fire sales that are probably going to be coming. I think this is just buying us some time. I will say this: hell of a time for Jay Powell to be saying, I think commercial real estate, the risk is manageable, and also that the banking system is fine. New York Community Bank, they had to bail this motherfucker out today.
I mean, I get that Powell's trying to not cause panic, but that is just. We've been talking about this for way too long, and I'm seeing articles people are starting to get worried about commercial real estate again. I'm like, you should have been worried about it this entire time. Don't take your eye off of one thing because the new shiny object, the Bitcoin ETF, got everyone's attention. Jesus Christ. So we got that going on. Powell also discussed, rolling back some of the new banking legislation that was to be voted on in July around, how much these institutions, amount of capital they're supposed to keep on hand. I think the new proposal was 19%, and the banks got all up in arms. I'm just this could get real bad in a hurry. A bank run, we saw it, and it could happen again to an even bigger scale. And if these people are only keeping, they only want to keep single digits of what they have in totality on hand, that's problematic, in my opinion. House, I want to kick it down to you. Did you hear any of Jay Powell's speech today or read any of the highlights? Anything jump out to you there?
I caught some of the commentary. I mean, honestly, I'm trying not to follow that until something really bad hits the fan, right? Because at this point, it's the market's so irrational that I'm just riding the irrational wave and then seeing, if we continue to go up, cool. I'm gonna keep trading the way up, and once something starts turning down, that's probably where I'll pause for a little bit until we see a big wave down. But no, I mean, there's nothing that the government has said for probably the last year has really made much sense to me in terms of fiscal policy, right? And I kind of get it. We came out of COVID. They're probably, trying as hard as they can to not lull us back into another crash like that and then have to do some sort of stimmy program or just let it all fall. So, I've got my stock portfolio allocated. I've still got some positions I'm DCAing to and stuff like that. But for the most part, I'm really just focused on crypto. And, you can't completely neglect it because a lot of what they say will impact crypto. But at the same time, with the ETF inflows and the Moon Boys in the timeline calling for 200K Bitcoin by the end of the year, I'm like, okay, I'll keep fearfulness in the back of my head, but I'm sorry, Kevin, I gotta hit some of these longs, man. They're pretty juicy right now.
Best of luck, man.
But I will say the funding rates did get scary there for a bit.
Let me say, I guess, this about Powell's testimony. The last few times it's happened, it's been an indication of when he says we shouldn't be worried about something, I want to look deeper into that and how the reverse of that will negatively impact my financial situation, because I don't believe him for one goddamn second when he says that we shouldn't be worried about commercial real estate. No freaking way. So that's how I personally am interpreting what his comments are. Is oh, he's saying this. Okay, I'm going to go the other route. And how could this impact my holdings? A while ago, I was holding months and months ago, I was holding a lot of regional banks. I was like, nope, this isn't happening anymore. Time to sell these things. And thank God I did. So that is kind of how I'm approaching Powell's commentary at this point. Kevin, you held up the three. What are we trying to say there?
3 for 3. Powell's crises. 2020, 2023, 2024. We'll see if that one comes through. But yeah, I mean, I think a lot of people either love Powell or hate Powell. I think he might be one of the worst Feds ever, just for how many crises have been under his belt. Granted, I know a lot of the things aren't necessarily his fault, but we've kind of orchestrated this scenario where it doesn't get good or better in any way. I think a lot of people are also thinking that they're just going to keep printing their way out of this. I don't think they can at this point. And I think it's a lot easier for there to be 2 to 3 years of pain and save the world reserve currency than it is to just absolutely let us get to the point of hyperinflation, right? U.S. loses the world reserve currency in any way or loses strength to it in a significant way. I mean, that just creates a slew of problems. It's easier if everyone kind of goes into this recession, everyone kind of gets tanked, and we just happen to be the ones that come out on top and first, like next time. I genuinely think that might be part of the reason that they might not save as many of the banks as a lot of people are anticipating. I think they'll save some. I just don't necessarily know which ones they will. And it'll probably lead to something very similar to what we saw in 2008, acquire some of these banks, at least the ones that are worth it. Obviously, some of the other ones just absolutely fade into obscurity. I'm not going to pull up the sheet, but there's, I think, 300 and something banks right now that they're talking about could potentially go under. I think it's closer to 400. I necessarily think that could be more, but I definitely think there's a couple of big boys in there too. I mean, today PNC and Morgan Stanley both down 5% right off the bat to start the trading day. There's some, again, we're outsiders, but there's definitely insiders out there that, like, very similar to New York Community Bank, that probably woke up this morning and said, "Are we going to make it to the end of the day?" And then obviously they got their little bid in there too. So I think that's kind of the thing that we're going to be watching. Very similar to Lehman Brothers, Bear Stearns.
Okay. Guys, a lot of banks if that many like regional banks, and it's just going to continue to snowball with the commercial real estate crisis. Like, there's so much coming due in the next 2 years. I think I read about $1 trillion of commercial real estate is going to be coming due in the next 2 years, as far as whether or not people are going to re-up, renew their time in there. And you see everyone trying to force back to work, people to come back into the office, but it's not going too great. I think we've reached the point of no return. So that's an interesting comment from Leroy right here. Doesn't seem too good to me. Yeah, I think so. That's not ideal.
Not at all. They're also one of the ones that we brought up on our spreadsheet, like 8 months ago, and they had like a huge amount of FHLB percentage is operating as equity. And again, it was to the levels very similar to Silicon Valley. What was the other one? First Republic. And let's not forget Credit Suisse too, man. I don't think people noticed this, but I think it was the president of Swiss banking or something like that recently stepped down. He was supposed to finish his term in 3 years, stepped down. We know that UBS has a ton of exposure to not only just Credit Suisse because they acquired all those assets, but they also acquired a ton of Evergrande assets back in 2021. Evergrande is in trouble. We're also seeing that what's the other one? Country Garden is getting to a point where they might be winding down, which will lead to a fire sale. One bank, all it takes for there to be a fire sale, and then everyone's assets, their prices change on their balance sheets. So yeah, seeing the PNCs paying you more in interest than you pay them for your mortgage, very similar to what was it, Binance, when they were paying a shit ton of amount for USDT percentage, APY, and there's questions with their solvency. So I think there's definitely parallels across every sector right now.
All right. Well, while House is down there going long in whatever trades he's doing, let's talk for a second. We'll get into crypto momentarily. Let's talk quickly and touch on jobs. We had the latest jobs data today. Private sector employment came in under expectation. The expectation was adding 150,000 jobs. They added 140. The JOLTS report, so looking at job openings, came in right at expectation, 8.9 million, same number as last month. So nothing too crazy there. We are seeing more and more layoffs happening. AI is slowly creeping in and taking on more and more, people are companies are saving money that route. Anything jump out from the jobs data today, Kevin? Any, why am I blanking on the term right now? Jesus, I just had a total meltdown. They adjust any previous numbers. I'm not sure what I'm trying to say here.
Revisions or just any numbers in general. I mean, I think it looked like, it's kind of leaning in the favor of what we're expecting, right? Less job openings than anticipated, but still above expectations. I'm really interested to see what unemployment looks like. I don't know if it's going to be what we want it to be. And again, want it to be. I don't want people to be laid off, but expect it to for what it should be for how many jobs we've seen layoffs come through in the private sector in the past 2 months. I mean, even this month as well. I think that it's just going to be another thing where it's going to be nothing until it's something, right? And it's something we probably should have, at least I should have noticed earlier, is that unemployment's like the last thing to go. So once you start seeing that, that's probably when the equity market's tanking at that point. So we're just going to have to wait. I do think that unemployment is probably above 4% if we're just using old metrics of accounting for what is unemployment at. But I think right now we're just going to have to wait till that that shoe drops, because for some reason it's just staying below 4% right now. I think the market still believes that there is this opportunity for a no landing or soft landing. So as long as they're spending, as long as jobs are open, and there's nobody that's not necessarily, cutting job openings as much as they were, that's what we're gonna have to wait for. Good thing is though, we are seeing continuing claims and initial claims obviously stay up or rise. So that's going to be very telling of where we're heading in the year to come or so.
All right, let's move into crypto. House, are you watching this ETH? Are you seeing ETH right now?
Oh yeah, big time.
ETH is on a nice little run today.
Yeah, I'm
Go ahead,
wondering, what I'm curious to see today is if it breaks what it hit on, I think, Wednesday. It touched like 3903. I'm curious to see, if it'll crack 3900 again, because it's right on the border there right now. I guess that was this morning instead of Wednesday.
Yeah, I'm not seeing 3903 on TradingView yesterday. It looks like what it hit.
Yeah, it was this morning at like 5 a.m.
Yeah.
But yeah, I'm curious to see if it'll crack 3900. If it trends towards 4000, it looks like that's where the Bollinger Band's at the top on the hourly. But I mean, what really has me hung up is just that candle on the daily from yesterday. It was just straight up and down both directions, like a little bit red, and I was like, I really don't know how I feel about this. But yeah, I mean, I think, depending on what Bitcoin and ETH do, I'm kind of 50-50 on, we either just go straight up if it breaks ATH and then we get the correction, or it just bounces as soon as it starts cracking new ATH, and then we get the big correction that Kevin's calling for, because it does kind of fall in line with his Elliott wave structure on the ABC correction. But yeah, I mean, either way it goes, I feel pretty good about where I'm positioned, and just hoping to, scalp some swing trades in the meanwhile. But other than that, it seems like AI coins have been really taken off, as well as some of the storage file related coins. So that's kind of been where I'm focusing, mostly doing a lot of research and trying to figure out where I want to put my money and allocate most to. I recently caught a pretty good entry into Render. There was a massive dip down from like $8 to $6.15, $6.20. And I caught it about 660, and now it's battling to get back over 9. It hit 960 this morning.
Yeah, we'll have to maybe do like a show where he's just focused on alts, and you can kind of give us some of your thoughts there, because I know you've spent a lot of time in that area, and I'd love to learn more about it. Kevin, I want to kick it to you for your take on crypto right now. I know that there's that data point that came out yesterday around some long-term Bitcoin miners who sold right at the top, and that's what caused a big part of the pullback. I'm curious. I'm sure you are taking it as it's going to be bearish, but I'm curious. Can we see this as potential? Like, okay, we had to get that out of the way. These people are going to take profit as we move closer to the halving, and it's actually a good thing for the, let's not say short term, like intermediate to long term, of moving some Bitcoin into new hands of people who don't have the same amount of, because it was like me, not the same amount of dollars, obviously, but like selling Nvidia shares that I had for a long time, right? Like I am not moving the market. You may find this hard to believe that my amount of shares sold did not actually move the market, clearly, because it's now up to almost $900. Let's not get into that because I don't want to cry on camera. But what are kind of your thoughts on the short-term and long-term impacts of Bitcoin miners taking huge amounts of profit and that Bitcoin moving hands?
Well, I mean, I think they've just been through so many cycles before, to the point where it's like, got to take profit at some point, right? We're in a very different place now than where we were back in 2011, 2012, when Bitcoin just began too, right? We were in a pretty lax, environment to the point where outside of even just the European banking crisis, which happened like 2011, we have not had any real headwinds until about 2020, right? And even so, after that, everything just shot straight up. Then 2022 came around and everything just went straight down. So people who were probably holding from such a long time ago were like, oh shit, that really sucked. I had $69,000 Bitcoin at one point and now it's gone. And then now conditions are very different now in the economy, in the macroeconomic, in the monetary system as well, to the point where it's like, well, somehow I'm back at 69K. What should I do now? And it is, I wouldn't say it's necessarily good that it's changing hands, because I do think a lot of that is going into the hands of some of these, some of these ETFs, some of these companies that are going to be holding a lot of these Bitcoins now that were on the market. They bought them back up. Now, does it mean that the value of Bitcoin is going to stay elevated? It could, right? It could mean that we just don't see Bitcoin go as low as the FTX, low, now that there's so much, adoption, I think, in the financial system. I will admit that. But I also think that we're also like I said, in a very different scenario than we were back in 2020, 2022. I mean, in the past year or two, it's gotten worse, I think, for people to have how much debt people have acquired, B, how much money people are now making versus how many hours they're also working, and C, a lot of people like to believe that they can hold on to Bitcoin forever, but sometimes, if your mortgage is delinquent and those debts keep knocking at your door, you're going to do what you can to survive.
Here's another local top signal for you. I don't use TikTok because I'm a grown man, that kind of thing, but I do follow TikTok investors on Twitter. And when they start posting videos of TikToks where people are saying that they are going into deeper credit card debt because they want to buy more meme coins, because they know that the meme coins are going to make so much money, it's going to be worth taking out the debt on that. I'm just like, oh, so we're like top, and we're getting ready to crash real goddamn hard. So that was something I saw. I was like, this is a top-ish signal, if you will.
Yeah, and I also want to bring up the facts, what's going on with Tether. Obviously, I think House and I both agree that there has been some level of manipulation in the markets when it comes to USDT on chain, whether that's on the TRX blockchain or other exchanges that have seen some type of manipulation using that specific token. There was some issues with Deltec Bank, and Chris actually brought up a really great point, how the banking crisis here and also globally could cause problems for Tether. I'm really interested to see if that is something that could play out to the point where it's like, well, maybe their solvency comes to light if one of their banks or a few of their banks that, do still bank them. I know Deltec is the only one that's kind of on paper that most people know. If they start to see a lot of, I mean, here's Ace saying it too. If they start to see some headwinds and people try to go on a bank run, well, what happens to the Tether treasury, also to some of these other banks that are using Tether? I think that's going to impact the crypto market as well. I was early on Binance. I think Binance is one that kind of got saved just because the US government decided not to go as deep into it. I think that would have also prematurely caused a crash in crypto, along with a lot of other things before we got these ETF approvals. So I think that now that those are out of the way, I can debate whether you want to see the ETH ETF approval by May or whatever. They keep delaying it. So I don't know if that's coming this cycle, maybe next cycle, but I'm pretty...
It's coming this cycle, buddy.
I mean,
be worried about that.
If it is, they're definitely front running it right now, and they're doing a really good job of it. But I think at some points, the fraud and the things that people have front ran to the point where it's just not sustainable will get called on. And when that happens, that could just open up a can of worms that people who are extremely bullish right now just don't want to see. I know I sound like I'm preaching at a funeral right now, but it's just a reality that we have to kind of keep in mind, that we are looking at a system that is probably going to get called bullshit on very soon. And that's because the monetary system and the debt markets are just so overweight right now. It's going to bleed into equities.
Okay. I do got to dip in a few minutes, so I want to kind of give you guys any final opportunities to give your thoughts on what's going on today. I know that the two of you, I believe, are going to do a show tomorrow. I'm heading to snowboarding. I'm out for a few days, which means the markets can go ahead and crash because that's just kind of how it's been. But any final thoughts from you, House? Appreciate you jumping on with us today. And then Kev, I'll kick it over to you.
Yeah, I think the one thing that I'm paying a lot of attention to right now, or I guess the two things are funding rates, which I already briefly mentioned, because it seems like they've cooled down a little bit. But if we start, getting in this mega bullish mood again, following the ancient whale dump, I think that'll be something curious to explore, as well as looking at the options data over the next few days and probably next week. I think between tomorrow and the 8th, there's something like 2 billion, and I could be undershooting that number, worth of notional value expiring. I know just between Binance and Deribit alone, there's something like 980 million in the next 2 days expiring. And that's just on Bitcoin. So that's a combination of long and short volume. So honestly, that's kind of what I'm looking for, because, when all that expires and all that leverage gets flushed out, a lot of volatility could happen. And maybe I can catch some scalps.
It's over there catching scalps. Kev, appreciate that, House. Kev, over to you. Kind of give me your final thoughts today, what you're going to be looking at over the next 24 hours before we call it a day.
Yeah, absolutely. I think we could be watching the metals all day long, seeing how that plays out. I really do think a lot of
Buddy Pete just over there watching metal.
It's funny too, because I'm not bullish on gold right now. I could be wrong, right? I just tweeted out that I think that the dollar could be bouncing here. We could see a little bit of a correction. The correction could be over, and we could start to see the dollar rally. But what would that entail? Obviously, it would be some type of pullback in the equity market, some pullback in gold as well. Obviously, that would be some type of financial crisis. I'm not saying it's happening sooner than later, but I do think that one is coming. It's just it's in the cards at this point, in my opinion. Not fact, just my opinion. But I do want to show people how fast things can get out of hand. Let's take a look at New York Community Bank, right? This was back on, January 31st. So, last day in January, we saw it drop, 37%, right? It was trading above the 200 and the 50 moving average just a few days prior. And then in the matter of when it dropped to where it currently sits, it's dropped 65, almost 66%. Even the lowest today dropped about 82% in a matter of days, right? When I say that the banks could collapse, it's so fast. It was the same exact thing for Bear Stearns, same thing for Lehman Brothers. There's talk, yeah. Eventually, it gets to the point where talk doesn't do you much good, and you have to put up the numbers. Otherwise, you're going to start seeing the bank runs, the fire sales, and all that. We talked about collateralized loan obligations. If we continue to see banks collapse like this, the big banks are in no position to be taking any gains off of that. The CLOs would probably go bust. They would rather have the swaps on that. But the important thing to keep here is everything could look fine, and then it just doesn't. And that's the unfortunate thing about banking. And we've seen that time and time again. Last thing we'll show is Citibank from 2008. And the reason I say this is because this is arguably one of the stupidest charts I've ever seen in my life. I got to go to the monthly for this one. Citibank was trading insane, somewhere around $572 a share in the matter of, say September 2007 all the way down to December 2008. It dropped from $572 all the way down to roughly, $12. So things like this happen really fast. You're not going to know when it hits. There are definitely signs in the debt market. They're just, you're not going to hear any names until we start to see the exposure, come to the surface. So just keep an eye on things. I don't think that we are in a good place. And, we talk about tech all the time. Tech rally ends when the banks decide. That leverage not in the system. You see problems like we did today. Say that $1 billion dries up by tomorrow. No one's getting any loans to ape in the fucking super microcomputer NVIDIA at $900 a share. You probably see some of those calls that she bought get closed out.
Yeah, because people are aping into Shiba Inu instead. So that is the.
Did you see the one guy? The one guy at Shiba Inu on Twitter, he was like, "Look, I bought it yesterday. It's up I made $64 in one day. You guys said it wasn't going anywhere." Oh man, I love first time traders.
Oh boy, it's gonna be. I just please, if you happen upon this, don't be over leveraged into this stuff. Like it's like going to the casino. Take enough money, you have a little bit of fun. If you turn some profit, great. If you don't, you're still able to pay your bills. Just get that in place, okay? Don't be buying crypto on a credit card, please, expecting you're going to outpace the interest rate on that. Because it ain't happening. All right, that's how we're going to wrap it up for today. Old man yelling at clouds here. Appreciate everybody for joining us. If you have not yet, hit that like button, subscribe to the channel, drop a comment, share us out, all that good stuff. Kev and House will be back tomorrow. Then Kevin is going to be a grown up and do his taxes on Friday. Good on him. So no Friday show, but we'll be back nice and early on Monday to get another excellent week started in the markets. House, thank you so much for joining us today. Kev, pleasure as always. Love all you guys. We'll see you next time.
Take care, everyone.